following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Starting a little bit late today. Apologize for that. We're showing just the first thing we want to look at. We're going to take a look at our scanner really quick. And if you've never seen this before, we're showing the TAS profile combined breadths. And that means, and this is on many, many exchanges in front of you right now, this is a lot of number crunching to provide these values. And what this really does is it shows the tide of the marketplace, as Basil coined it one time. I just love that term. And this heat map that you're seeing really gives you on 4 different time frames, weekly, daily, 4-hour, and 1-hour time frames, of what the actual breadth of the marketplace is doing relative to TAS profiles. Now, you can't get this information anywhere else, and this, to me, is something that I can't really trade without it these days because, for example, as we looked at the S&P recently, I'm just going to drill down into this one. We're looking at our intermediate daily heat map. Now, if I go to our 4-hour, we're going to see, pretty much the same balanced equation here. But what we do with this is we look at the speed dials, if you will. We drill down into these. We look at the internals of what the actual internals of the S&P 500 are doing. If you can see my screen right now, you'll see that the imbalance is towards the downside now. And what we were looking at recently, just sheerly looking at trading the S&Ps from the short side, opting out on the longs, we're looking at and trying to find those major inflection points to trade off of on the S&Ps. And we'll kind of review what we talked about yesterday. But as we look at these particular speed dials, it kind of shows you in a real quick glance whether we're more imbalanced towards the downside or the upside. It's a real simple math equation that really makes sense out of a very complex set of algorithms that are going on in the background. So again, trying to make it simple for the end user, what we do here is, we kind of gaze at these particular dials, and when we notice that, the market's going up, and we've got some factors here that we need to pay attention to, being, we're flipping around on our 3 lower term time frames other than our long-term weekly. And what does that mean? That means that the 60s and the 240s and the dailies have really been relatively weak as the market's been climbing. And what does that mean in general? That means that the profile breadth of the marketplace is actually kind of expanding like a rubber band. And at some point, that has to actually snap back, and those kind of high beta arbitrage factors that really glue the S&P together have to kind of start taking control. And that being said, this weakness in our intermediate breadth, while our dailies, 240s and 60s were flipping around, was concerning to say the least. All right. So, I don't want to be a Monday morning quarterback, and I don't want to say, hey, I told you so, because at some point, everybody's going to be right in the trading game. They're either going to be right by saying, hey, at some point you got to go long, at some point you got to go short. But this gives indications to possibly opt out on the long trade in this instance and say that, the risk is to try to still buy the dip. All right. Now, here's after we drill down in these S&Ps, and I'm going to go back to our, heat map here. I'm going to drill down into the S&Ps. I'm going to see the same information up here, and I'm going to be able to look at, there's 4 different time frames, and I'm going to be able to also sort through the pack here. And I'm going to go to my daily. I'm going to see what's, what's trading below the box, and I'm going to show match results. You've seen this before. I can do this to all the time frames, and I'm starting to see a ton of red on the screen now. And this kind of fruits of our labor when it comes to looking at the breadth relative to trading the S&Ps. Now, what I'm going to do is I'm going to pull up our S&Ps. I'm going to stick with this for a little bit here, so just kind of bear with me. Going through by the way, on our weekly profiles on the S&Ps, if I can get this chart to come up, we're starting to have an orange bar up here. Now, if this stays orange by Friday, we're more than likely going to have new profiles up here, which means new supply areas on our long term, which hasn't happened in a while. So drilling down a little farther into our daily situation, we talked about not having any inflection points to really hang on to here above while price action was kind of going higher. We don't have any long-term or intermediate-term inflection points to pay attention to on the short side. We had to kind of drill into our 240s. But what's happened along the way, and if you've been watching the show, we've been talking about this, it's probably not the ripest opportunity to continue to buy this higher drifting market because the leverage is really not on your side. We made new, recent highs in the S&Ps and, just really didn't show any follow through. That was kind of a nice little technical feature that we were provided. But as we kind of pulled back into 68, 69, almost to the tick, we hit 70. We did the, kind of customary buy the dip bounce here, but still we weren't really, we were more focused on taking off targets down below from the short side off of our 240s than to really load up here at this inflection point. Did we miss a big bounce? Without question, right? But again, that could have, just kind of edged up here, fallen off a cliff, and then where you left standing as a long-term investor. This is kind of a nerve-wracking experience. I know we're kind of still trading above profiles in the weekly and daily, but as a trader, we want to try to figure out, how to utilize the information in front of us and try to, not have to suffer these wild swings, which I feel are really going to start to happen more so and more so. So yesterday we talked about 2103 pre-market. And I know we were kind of sitting down here last time we had this conversation. We rallied back up. This is a great, great example of sticking with your guns, taking your medicine, and again, turning the rents the same way when we get down into ripe areas again. Now, again, this was kind of a rally in our face that went up to 2109 above this 2109 above this 2103. But, these are short-term inflection points. And when you have these things, again, scream up, especially pre-market like that, you got to take your medicine. You got to be willing to admit that you're wrong a lot in the trading game. And our best, trading systems are rarely right more than 45% of the time. So if you just kind of, take that in consideration, an automated trading system with all things considered and factored in is not going to be the cat's meow when it comes to winning percentage. So getting back in the game, continuing to understand that the breadth was real iffy, the leverage was more than likely on the short side, like we've been talking about, picking your battles from that angle instead of just, taking the read the newsletter, hey, we're going to, down 30,000. This is good information. It's great information to have to save some points. Now, what do we do at this stage? Again, we have no new information really appearing on the weekly and daily, so we're going to pretty much primarily focus on our 240s. The inflection points to pay attention to with the breadth in its current state rolled over. I know we got a little bit of a bounce this morning. When the equities open in the S&P 500, these are obviously going to readjust a little bit. But I love dearly how this weekly speed dial here is starting to roll over into negative territory. Not yet, showing its hand a little bit. We're going to find out a lot come Monday morning. That might be the chance to go full bore short for a while. But we're going to have to cross some borders to try to really kind of, put some odds in our favor on that, namely 2068 to 2063, that DMZ, hoping we get a weekly close below that area this week. And then I think all bets are off on the long side for a while. But you've got some great trading opportunities at this stage, namely on a short-term basis, shorting against 2096, 2097, and then trading breakouts again below 2084.85. Excuse me. Still suffering a little bit from the other day. So that's the situation in the S&Ps. We also spoke pretty bluntly yesterday, excuse me, about the NASDAQ being the riper opportunity and showing its hand a little bit early. We talked about 44, 62, 63, getting below there. Again, the NASDAQ breadth was a little bit more riper opportunity. I'm going to kind of go back to that right now. I go into our NASDAQ here. And we were kind of, a little bit more bearish here pre-market than we were on the S&Ps. And we were hoping the S&Ps would give this NASDAQ some help, if that's the correct word, on a relative strength basis, as it's kind of been shown, it's in a little bit early on the weak side, to start stepping on the gas pedal below 44.62. That happened. Now what do? You got targets initially 43.70 on this, on the intermediate, excuse me. And you've got actually a considerably weaker situation here in the S&P. So breakouts and downs below 44.0708, in my opinion, can be sold. Remember, you got to turn the wrench the same way. You got to take your medicine. There's no crystal ball here that we're always going to be correct. And you got a leverage on the short side on the resistance area around 34.32. So those are the big inflection points on the NASDAQ short term. We'll be right back, folks.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. It's a real treat. We're going to have Steve Dahlin with us in about 5 or 10 minutes, and Michael is actually trying to adjust some of the e-signal charts on our server right now. So we're going to stick with the scanner for the next 4 or 5 minutes until we go to the next break, and then just going to be awesome to have Steve Dahlin on. He's in Chicago. He's in the pulse of that whole Chicago futures pit-related scene up there, and he gets up early. You got to get up early in Chicago, especially to beat the traffic to get downtown, unless you ride one of the many trains feeding that downtown area. I used to live right beside the L, by the way. It was it's like after a while you don't even notice it when you live there and you live right beside it. It's kind of weird, but it literally, the L track was attached to the building that I was in. That was a trip. People came to see me; they couldn't sleep, but slept like a baby up there. Anyway, let's take a look at our scanner. Let's go backwards just a little bit. Let's take a look at the ETFs. Now, this is something we just put in, and again, I'm looking at our daily time frames here, and this is obviously a direct function of how the equities closed yesterday, because we can't really, have the future foretold of how all these stocks are going to open before they even open. But I wish we could. But as we look at this intermediate grid, you've kind of seen some of the, obviously the XLE. This is kind of the weather the storm ETF right now. And as we, kind of click on our paragraph function, we kind of get a little bit of a dissertation on the XLE in general, give some inflection points to pay attention to. We're going to drill down into the strongest sector in the S&P right now as far as ETFs goes, the XLE. And, one of the things I want to point out is, we've got the, the crude oil of the make sure the contract, the June contract. We've continued to edge up. I'm pretty sure we hit 61 today. And I don't have my charts with me right now. I've been, watching all the Asian markets all day and then just kind of gazing over crude oil periodically. But, as we look at some of these stocks in the XLE, some of them have started showing some reds that were on some time frames that, when we look at the weeklies, we see two stocks that are still trading below profiles. These are ones that have been on our radar screen for a while. Murphy Oil and Pioneer Natural Resources Company, PXD. And PXD's got some issues. I'm going to pull this up really quick. Trading below profiles on all time frames. This is the level of our marketplace, this yellow line here. We call this the level of the market. And as you can see, multi-time frame views. Thanks, Jay. Crude at 61.76. I thought we were still above 61 there. But a little bit handicapped right now. But thank goodness I've got the scanner. I could actually go in here, by the way. Let me just show you this really, really quick. Futures. Boom. Crude oil, CL1. We're not allowed to give live prices in a derivative piece of software. If you're not paying for exchange fees, we can't do this. So one of the cool things we've done, and we're continuing to make upgrades to this, is to be able to give you these inflection points in real-time derivative actions that are happening with price action without actually giving you the prices themselves. So, as we mouse over these, we've got the inflection points in our face on these time frames, the box, if you will, the top, the POC, and the bottom. But we can go into our landscape view and basically see very quickly where the level of the marketplace is without actually providing you a real-time quote price, but giving you something that I think is kind of neat to be able to track where the actual real-time price of crude oil is, the so-called level of the market. And here's our inflection points that were also mapped in the scanner here as we mouse over here. This is one of the coolest products. I mean, I'm obviously a little partial to it and probably have a biased opinion at this point, but it's a very neat product. We're going to get this out to you. Hopefully Michael and Tommy will get this rigged up today. I know we've been talking about that for a week or so here, but it's a little bit of an endeavor to get you guys an application permission and everything properly with them, but I'm hopeful that's going to happen today. So as we go back to the ETFs and as we go back to the XLE, I want to see, what's not cooperating. I want to kind of drill down into this ETF environment real quickly. Boom. These are the ones that, should be on your radar screen. If crude oil turns south, then it may or may not. The good news is this: if you're looking after a run-up like this in crude oil, we were kind of looking for some followers and buying the dippers and things like that. I hear the music. We're going to be right back, folks. We're going to have Steve Dahl with us.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the Future Economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. And we were trying to finish up some of the ETF XLE talk that we were getting into right before we took a break. But I think we've got Steve Dolan with us from Chicago. Steve, are you there? Hello?
Oh, there we go. Yeah, I'm here.
Okay.
I can hear you, John.
Hey, man. Good to hear your voice. How are you?
I'm doing mighty fine. A beautiful day here in Chicago. Very lush and moist here. We've had a lot of rain in the region.
And is it warm enough for those things to start showing up downtown yet, or do you know what I'm talking about?
Yeah. We won't get into that on the show. I'm not playing any golf. Put it that way. It's not that nice yet.
Okay, we'll leave it at that. Man, there's some just unusually nice golf courses up in the Chicago area. It's just a shame you can only play them, 6 months out of the year, or 7?
If that. I live in suburban Chicago, and it's the self-proclaimed world's golf capital. So I, not for
Right.
me, apparently, with my busy homestead.
I think self-proclaimed is the key word there. Hey, listen, thanks for joining us today. I know we've just got, we've worked so hard, and Steve, I don't know if you guys don't know a lot of background here, but you probably will in the near future. I hope you guys just really get into some of the products that we have in general, especially through the TFNN network. But Steve generally is, I call him the puppet master. He just kind of moves all the pieces around and runs a lot of the back end processes and obviously a lot of the sales that we do. It's just a joy to work with you on a day-to-day basis, and a lot of people probably have never heard your name or met you. So I just wanted you to introduce yourself and let everybody know kind of how you don't sleep very often.
Well, in general, that's a pretty true statement. No, John and I have been working together over a decade, right, John? And I come with a very strong background for 14 years in the commodity brokerage business. So it's the fastest game in town. So I know the challenges, I know the opportunities very well, and I think over the years, John and I have put together a real nice mix of experience, and our programmers, of course, second to none, that basically work tirelessly behind the scenes and don't get an ounce of credit, of course, from our internal efforts to make sure they know they're doing a fine job. But we've seen a lot of changes, John, and I think just talking to you here today, we're so busy putting out a good product and getting the good word out about it that sometimes we don't kind of stop to say, man, where these markets were 10 years ago and how you needed to approach them is so different than what you need to be doing now as an empowered trader looking for opportunities, just like you and I do on a daily basis. And tools like the scanner available right through TFNN is a wonderful tool to get you down the path of getting one step closer to finding some really good opportunities that you can be proud of.
Yeah, I mean, Steve, some of the things you said, if you don't mind, I'd like to expound on them a little bit with you. You've seen so many things happen, like you just said, in the transgression of events over the last 10 or 15 years, and so have I. I mean, it used to be, you could wing it a little bit as a trader. You can go on some hunches. You could always have the concept in the back of your mind that you're going to recover if you make some mistakes. It's a little different now. It's almost, you have to be a lot more disciplined. This is my opinion, Steve. Maybe it's yours. Maybe you can give us some thoughts on what I'm saying. But, it's you almost have to be a lot more mechanical, and you have to be, like I said, is a lot more disciplined than you used to be, and you gotta, things can run away from you a lot quicker these days. You're trading against computer programs like never before, and that's why I think trying to make the most sense as possible out of trading the futures with looking at some of our products with the breadth indicators and the inflection points, if you will, on some of our profiles. It kind of puts more of a roadmap in place that you can lean on things a little bit more mentally, psychologically, and hopefully make a little bit more sense out of things to kind of mechanize the way your day kind of unfolds as a trader. Steve, I know you've worked with systems a lot, and I know you're that's not a mystery to you to watch how these things have kind of progressed forward and taken some of the kind of hunch processes out of play as far as individual traders go. And what are your thoughts about how things have kind of unfolded in the trading world?
You're exactly right, John. I've got extensive experience in the automated trading realm, and I've seen it all. I really have. I use that term liberally, but I feel like I've seen what's been out there, what's out there now, to know that there's no easy money in the market. Now, when I do some training and so forth with traders from time to time, I always impress upon them, much like you, where using the TAS product line to find some opportunities, and you have these no-brainer breakout trending market moves that the entire world is on. I'm not worried about customers taking advantage of those opportunities. I say those are the easy trades in the market. It's where to know when there's a battle worth fighting, as opposed to just fighting a battle every day. And sometimes the best trade you make on some days is no trade at all. And I think a lot of retail. I'm telling you, John.
You can't say that enough.
I've worked with, and I've had the pleasure of getting to know and working very intimately with literally thousands of retail traders over the years in my time in the brokerage business. And sadly, I think there's always a feeling for the independent trader to feel like they're not doing anything, or they're not working hard if they're not in a trade. So there's this constant feeling to, if you come to an office like mine. This is Mission Control Central here in suburban Chicago, where I do my magic, and you come to work here and you feel like, I'll give you an example. I don't have a trade right now. I've got a lot going on here. You can see in the background behind me.
Right.
I don't have a position right now. Right. Specifically, okay, there's a few that are looking promising, but that's okay. And I think kind of coming to terms with, as a trader, no position is in fact a decision, and sometimes a pretty good one, is more of a mental process. So the trading psychology side of things is often overlooked. The mechanics and having a roadmap of where to specifically pick those battles, and when to know when the market's not cooperating, and don't view that as you're wrong. I tell traders, sometimes you get into a trade with the information you have up to that minute, and you are making the right decision to maybe push the buy or the sell button based on probabilities, based on market profile, based on TAS products even. And then something changes in the marketplace, and the same products are telling you it wasn't meant to be. Get on the sideline and perhaps maybe take a juxtaposed position even that puts you going in the other direction. And that doesn't mean you were wrong. It actually means you were right. You took a strike on your first time at the plate, and taking a strike doesn't mean you're done. Doesn't mean you struck out.
Right. I tell you what. Let's kind of go case in point here. You're still with us, right, Steve?
I'm here. I can hear you loud and clear.
Okay, great. I'm going to pull up crude oil. I'm going to pull up our weekly. And guys who have been watching this show, they know that I've been leveraged on the long side since this inflection point on our weeklies. If you're seeing this, Steve, around 48, 49. So, and we looked at, I'm just going to kind of give a little bit of the sauce that you've been talking about how do you not be in the market all the time? How do you use some leverage with some of the products that we have? How do you let the market come to you and not all like you were talking about a while ago, Steve, you got the coolest setup of anybody I've ever seen. And if somebody saw it and heard that you weren't in the market most of the time they would go, oh, that's a shame, but I say, hey, you know what, that's actually probably being relatively smart and picking your battles at prime opportunity areas. So I'm going to pick up crude oil here. We're having a couple of little problems with these signal on other time frames. I'm going to focus on the weekly because I think this is really proof in the pudding. Case in point number one. We looked at, from a relative strength standpoint, the XLE relative to crude oil, but we started looking at that relationship because these profiles and these inflection points gave us all the reason in the world to start looking at crude oil from nibbling from the long side for the first time since over 100. And why do I say that? Because on a long-term basis, Steve, as you know, this is the kind of game we preach every day. You want to kind of drill down from higher time frames to lower time frames. And, you and I have been talking about, okay, we had the technical damage on the long term on crude oil below 100. We're in that similar neighborhood. This is the June contract, as you know, Steve, in the 2015. So the numbers are a little bit different as we go back on the continuous. But as we started looking at these numbers down here, 48, 49, gave us some serious reasons to start looking at this from the nibble spin alongside. Then as we were looking at the profiles, Steve, and we were looking at this together when this happened, I remember the day, we said, look, the XLE is showing that relative strength situation, not making lower lows with crude oil. And we started combining kind of some thought processes and said, let's just wait till we get like some real clear confirmations on some lower time frames, start getting our toe back in the water on the long side for the first time in crude oil, and God knows when. I mean, we weren't really happy about this bounce, but this one looked a lot more relatively attractive. Now, Steve, you were the one that called this, to my attention. This week we closed on April 13th. We closed above profiles on the weekly on crude oil. Then it's kind of, hey, we have the technical damage now, right? Now we're actually looking to possibly even increase the position from the targets that we had above to start churning above these profiles, and then start looking at new inflection points to orient stops around on the long term. This is the type of information that Steve and I go through. I mean, we're pretty much talking, more than, possibly you and your wife talk, I would assume, Steve. But
that's a fair statement.
Yeah, I mean, but we, it's nice to see the same things. It's nice to kind of throw these things back and forth with each other. And you've been in the commodity business long enough to know that when these futures start moving, there really is no end sometimes. You have to take that stance. So what I'm trying to say, Steve, or my question really is when we got above these recent levels on the long term, and it was okay to be long and not okay to be short in that sense, that kind of information, how important that is to kind of have that futures trader not try to be the guy who gets taken out in the body bag by thinking a commodity product is too high and he needs to start shorting it.
You're exactly, John. You're exactly right. I mean, I wish I could tell you in my time as a professional in the commodity business that every one of my customers heeded my technical warnings and using tools like this. But eliminating one side of the market to focus on is really the first start and half the battle. It's the toughest decision that most traders make: what side of the market to be on. And again, especially knowing that there's always a tendency for investors and traders to feel like if they're not in, they're missing the boat. Being able to eliminate what side you're supposed to be focusing your attention on for opportunity, at least you're one off better than most. And then it's just a matter of, and this is unique to each and every one of you, is the velocity that you want to trade. Picking a time frame that makes sense for the speed you want to be trading, the pace of play you prefer. And we got, as John knows, we have proprietary trading groups that leverage this information and that trade thousands of times in a day. And then we have long-term investors, as I know many of the TFNN network are, that are using the same information in a very sane way, where you can put on some positions, not be losing sleep on them, check in once a day. Some are checking in once a week to see if there's been any key changes to the levels, and using the scanner to to keep you on, again, making that right decision of where are probabilities, not guarantees, in the marketplace at any given time. And my favorite slide, John, that we showed when we did that event at Trump Tower in Chicago last summer was the slide that says there's no such thing as certainties in trading, only probabilities. And I think that's a pretty good mantra for any trader to embrace, and also to view trading not as a singular event. So when you're talking about a trade like this crude, John, we don't view this mentally as a kind of a binary situation, ones and zero. Either we're going to make money and put it in the W column, or if we lose money on it, put it in the L column and call it a loss. It's a fluid situation. You're interacting with these markets on an ongoing basis. So this particular long entry opportunity is really just one data point on a very fluid situation, which, was a really nice trade of the year last year on the ride down from 105 a barrel down to the 40s. It was, some small fortunes made last year on our information. So
great. Steve, I hear the music. We got to get a break.
I hear it too.
Listen, thanks for joining us, man. This has been great.
My pleasure. We'll talk soon.
Okay.
So long,
bye.
everybody.
Okay, bye.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host of TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this two-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi, guys. Welcome back to the show. And thank goodness Steve Dahl was on with us for the segment he was on. It was just great to talk to him. And it's just logic's just grounded in experience and know-how. I love listening to him. Anyway, let's take a look back at our scanner. And the reason I'm pulling up our scanner, this is going to be kind of interesting to you, because I'm having a couple of problems with my charting, and I wanted to kind of show you that we may not actually need our charting to accomplish what we want to accomplish with using task profiles. So I just seem to have snapped back my charts here. But let's take a look at the euro, and I want to kind of sum up what's going here on the weekly, and then we're going to kind of go back to what I was originally talking about when we started this segment. We have gotten into this fair auction. We closed into it. We came back and retested. And I, again, not to be a Monday morning quarterback, just want to give you a little bit of history. We're right smack dab in the middle of this now. We talked about ultimate targets if we had passed that kind of DMZ between 110.5 and 111. Ultimate targets up top, if we had a weekly close up in here, 115.34 is not out of the question, folks. And I'm not jumping on the bandwagon after the euro's already gone up a zillion points. It's just the way it works. We close into a profile, we come back and retest that. If we hold, we can go higher. All right, that's been the case on the long term. All right, now we drill down into the intermediate. What did we talk about yesterday? We talked about a profile appearing below price action. All right, that is bearish, period. And at the same time, look where we retested. Yeah, I mean, I'm sorry, that is bullish. That is a bullish connotation in itself. Sorry, I was thinking, I had it vice versa wrong. So when we have profiles appearing below price action, that's very, very bullish. When we have profiles appearing above price action, that's, let me go back and pull our charts up here correctly. Are we looking at the right screen now? Okay, so when we have profiles appear below price action, that's very, very bullish. Vice versa, when profiles are appearing above current price action, that's very, very bearish. So when we had this appear below and we came back and retested, remember, the market's going to remember, it's like an exponential moving average. The market's going to remember latest inflection points at Minilat. Remember, this daily profile stayed in force quite a while horizontally, time related, and that inflection point again is 110.5. Where did we reach yesterday? 110.66. I'm going to call that satisfied. We have the new profile appearing below, then we're off to the races. That's very, very bullish, right? So as we're getting into near-term highs again here, there's nothing to really hang on to here, and there's absolutely, Steve talked about this when he was on the show, let's try to block out one side of the marketplace. Well, the side of the marketplace that you're blocking out at this moment in the euro, believe it or not, is the short side. Now, if you've been watching this show, just as a good case in point, and I could have pulled up all these inflection points within our scanner. That was where I was ultimately headed a while ago. Here's the EUR-USD, and here's all our inflection points that we just discussed, pretty much eliminating the need for charts for the most part. But if you've been watching this show, you know I was relatively technically bearish and fundamentally bearish if we had stayed below 110.5, 111. Steve's point again, it's a dynamic marketplace. We have to be willing to change our tune. And when these technicals start confirming those breakages of rules that we were operating under on the fundamentally short, technically short side, we've got to be willing to say, hey, you know what? It is what it is. Take our medicine, move on. I hear the music. Guys, you've been great. Steve was awesome coming on the show. Steve Rhodes is next. Be sure to catch all the shows on TFNN, especially Big Daddy Tom O'Brien later in the day. We'll be back again tomorrow, folks.
Basil Chapman has just announced 2 live workshops that he'll be hosting April 28th and May 5th that only subscribers to his opening call will gain access to. On April 28th, Basil will host a 45-minute live online workshop, The Essentials of the Chapman Wave, where he'll teach the basics of the Chapman Wave notation that Basil created and uses daily in his trading and newsletter recommendations. On May 5th, Basil will host a second 45-minute workshop where this time he'll revisit the 1929 market comparison webinar and provide his attendees with an updated take on the socio-economic trends Basil has spotted currently taking place. If you're an opening call subscriber already, then your seat is already reserved. If not, then sign up for a 30-day free trial to the opening call today. You get a month of Basil's daily newsletter, The Opening Call, along with 2 live workshops coming up. Don't miss out on this offer. Sign up for Basil Chapman's opening call newsletter today on the front page of TFNN.com.
This is TFNN.